Hi, today is the 17th and this is a belated weekly recap on the rhinos. I start here with the IV skew on December and January. Here we see that the trough is on 4900 and that explains why last week I had to roll them again. My shorts are now on 4925. So that's why the position has not suffered so much with the market relentlessly rising. Let's go back to Option and Explorer. This is the December trade. So here this one is looking okay. It's not doing great, but it's still fairly safe. As I just said, 49.25, it should be safe enough. This is quite conservative, but I don't want to have my call credit spreads on the left side of the trough. Now if I want to close them, it's probably like 90 cents here. I could, but I think they are safe enough and I will roll them again. What I'm thinking of doing here is actually to close my put side. So that would be 250 on the, and then maybe add one or two. So let's say I add two here. So it would be this late in the trade. The first objective is to start reducing the overall exposure. And here I would have less than 5K. Generally, after 28 days, I allow probably 10K, sometimes 15, and then towards 21 DT, 14 DT, 10K. And if I keep a trade up to expiration, definitely less than 10K. Now, this is not fantastic because the market has risen too fast and I probably should have done more in the last few weeks. So 275 is not acceptable. I should get at least 400 or 500. So this is not great. And even if in the next 2 weeks I try and pull those up along down a bit, that won't actually give me much. But generally late in the trade with volatility still okay, but now around 16 and a half, I generally add 75/50 broken bit line. I could put them a little higher, certainly. So this is something, once I've actually closed or cancelled or reduced the initial combos down here, this is something that I will be looking at. This reduction is maybe a little bit too drastic, but that especially if I still have to roll these upper side. So I would look for combos that increase my upper exhibition line. That is the line of thinking I have in mind for December. November will be closed in a few. November will expire this week. This is not great. Actually, these strikes are not even traded. So this is not the actual level, but this is basically what it looks like upon expiration. Now, January, there's a lot more we can do, and I will feel also more at ease if November is out, December is reduced, to really go full scale on this one. At this time, the trade is just being stable. That's fine for now. With 65 days to go, I intend building it up probably this week and more next week. Hopefully the market will drop a little. It looks like it is in a trading range for now. So for December, I will look at the IV trough and adjust accordingly. I'm hoping that this is good for now. That 49.25 is safe enough. So basically reduction on December and some repositioning, and that is it. So this is still fairly simple management. Contrary to many quote-unquote mentors, I look at the overall capital utilization, the 2 or 3 cycles being on, and not just a single trade. This is how a professional trader looks at his portfolio. So this is it for now. There's not much else to say. There's a lot more detailed updates on the Rhino Slack. So if you're not there, please join it. There will be a wealth of information there, and you can also ask me questions if need be. Thank you for watching, and bye for now.